and we'll touch base again tomorrow. For now, let's get to an exclusive conversation. Our colleague Rachna caught up with R Janakiraman, CIO-Emerging Markets at Franklin Templeton India, on the sidelines of their NFO launch. She started off by asking him about the rationale behind launching this NFO at a time when the markets are at new highs and valuations, some can argue, can be expensive. Take a look.
Markets are indeed at an all-time high, but the more important point is we are in the beginning of a fairly strong growth recovery. So on the back of this, both macro growth as well as corporate earnings growth are likely to be quite strong, so which means that even with the handicap of a slightly higher valuations, investors can make respectable returns in this period. So that is the reason for launching the product at this time. The primary reason is that growth outlook looks extremely promising.
Which sectors excite you per se?
So we are in the early stages of a growth phase, so which means that by and large this rising tide is going to lift all the boats. Every cycle also brings up some new themes. So this time also there will be some new themes like internet-based businesses, energy transition-oriented businesses. Those are the new themes, and those carry the excitement of that novelty factor as well. So we will look at all those things, and I don't think I can single out that in this cycle these are the sectors that are likely to perform. I think this is going to be a fairly broad-based rally, but some of these themes will be new and they will be more exciting to analyze.
For the investors as well. Speaking of investor interest, budget is just around the corner, anytime in the third week or the fourth week of July. Are there any expectations you have from the government in terms of policies or any sort of encouragement for investors?
I think by and large the most significant aspect of the past few budgets has been policy continuity. Government has been quite consistent in its approach, which is promoting stability in taxation, focusing on investment spending, improving the efficiency in the economy. We as investors prefer stability and predictability, so which means that this budget also we wanted to continue in that same direction. Of course, tactically you may see some higher allocation towards rural welfare spending. Given certain one-off incomes like those RBI dividends, I think government can do that without stretching the deficit numbers too much.